Hi, everyone. This is Jason Barrack of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He's Mish Shedlock. He's a registered investment advisor for Sitka Pacific Capital Management, and he also hosts one of the more popular economic blogs. Mish, how long have you been blogging on the internet for?
I've been blogging since March of 2003, and in February of this year, I moved off of Blogspot, globaleconomicanalysis.blogspot.com, to my own URL, mishtalk.com. And I'm really pleased with the move. There were a number of format things that I absolutely could not do on Blogger. My traffic is up since the move, and things are going pretty well.
Very nice. Yeah, I really enjoy your analysis. The last time you were on, you were pounding the table that there was value in gold stocks, and the gold, we hadn't had that big rally in gold stocks yet, and now we've had. But before we talk about that, though, I want to ask you about the currency volatility going on now and the manipulation of central bankers. Whether they're colluding or not to determine exchange rate prices of exchange rates on their currencies, and how do you think that's affecting asset prices?
I don't think there's collusion, because in fact they're all at odds with each other. They all want the same thing. China wants a weaker yuan. Japan wants a weaker yen. The ECB wants a weaker euro. The U.S. really wants a weaker dollar, which is sort of against trying to hike rates at the same time, if you would. So everyone's got this idea that a weaker currency is going to help exports. Mathematically, of course, you and I can sit back and laugh at that because it's mathematically impossible for every country to have a weaker currency simultaneously against every other currency. However, it is possible that they're all weaker against gold, and I do think the bottom in gold is in.
Yeah, I agree. I think the bottom in gold is in for a number of different reasons. You have the dollar index, which is looks like it's topped and it's starting to bottom. You have the supply side with the gold miners who were, when gold was around 1075 in U.S. dollar terms, the gold miners were just in dire straits with their balance sheets and things like that. I don't know how they were going to be able to keep the gold supply going. It looked like we were going to have mines shut down in the near future if we didn't have a rally in the gold price.
Yeah, that's the state that we were at. One has to wonder whether or not a correction's coming here. I keep watching for one, but that doesn't mean there is going to be one. Just look at some individual miners. Pan American Silver is up, was like at 5 and change, and now it's dingling with 15 here. Newmont, Barrick, Gold Corp, all have pretty much doubled off their lows, and then some of the junior miners are up hundreds of percents. Harmony, for example, went from 50 cents to $4. I mean, what a buy that was in December, where you could have got it below $1.
Yeah, and most of the mainstream financial people, the people on Wall Street, they totally missed that rally. I remember we had you on last year, and you were talking about, you don't know when the gold stocks were going to have a rally, but you were still accumulating, thinking, we have to have a rally in gold at some point for a bunch of different reasons, and you were just patient with it. And that's what happens with prudent value investors is you don't know the timing of things, but you know that things are cheap relative to other assets, right. And that's the way things have played out, and your patience has paid off.
Yeah, my timing certainly could have been better. I mean, I really started accumulating. I always held core positions, but I started adding big a couple of years ago. And in those first ads, which I've held, and I've received a lot of taunts over the months, well, when are you going to bail? And one person said, well, I'm going to buy as soon as you sell. And the taunts just went on and on and on. And I just ignored them and just added on the way down. And, of course, all of my ads now are hugely positive. Even my initial big buy. I'm ahead in some stocks, behind on others, but about even overall. So, people say that that's not the way you do things, and certainly had one employed such a strategy back, say, in 2000 with JDSU or Fannie Mae and some other stocks that literally went. Actually, Fannie Mae recovered, but some of the things that didn't. So you just have to be really careful about when and why to do that. But I was pretty convinced that gold was the value play, and at least as we're sitting now, I was correct.
Yeah, on value investing on a case-by-case basis is good. You normally got to go look at the balance sheet analysis, because there were a lot of miners who didn't make it when the gold and silver price went down. There were companies that got bought for pennies or companies who went bankrupt. So not everyone benefited from this rally.
Yeah, and the same thing in the energy sector, by the way, and I'm kicking myself for missing that one, actually, because my strategy all along in energy, and I never pulled the trigger, was actually to look for energy companies that did not have a lot of debt. I mean, that was the absolute key to who was going to survive there. And the real clue here was oil prices. I mean, everyone was saying, the bottom is in, the bottom is in, the bottom is in, all the way down from 100 to 80 to 70 to 60 to 50, and then finally, when oil broke 30 to the downside, everyone seemed to be saying, well, 20 is the next stop. That was it was that attitude change that sent out the signal, and I had a plan to actually start accumulating the energy sector. I didn't do it, but I did pick up some other resource plays that I'm happy with. You're not going to get everything right, but the signal was there actually in the energy sector for people to get in that on time.
Yeah, when you were on this podcast about a year ago, I was trying to sell you like off the recording about how I think oil was like 55 and it was maybe going lower, and I was like, well, now's the time to maybe start a position, and then if it goes lower, you add. And I don't remember what you said. I think you told me that you thought oil would go lower, and it wasn't the time to start adding yet.
Mm-hmm. I did say that. But I missed the bottom here. So it's very tough to do. And also, when oil was bottoming, a lot of the mining stocks were too, and that was really my focus at the time.
Now, this rally in oil, do you think this is fundamentally driven, or do you think this is mostly a short covering rally, or this is a weakening dollar rally? What are your beliefs now, and why we've had a rally in many of the commodity prices besides just gold and silver?
A little bit of all of those. There's that huge fire up there. There was an attitude change. Once the attitude got to as extreme as it did, and the same thing happened in miners, we were headed for a rebound. I don't know how much higher it goes. I would not have bets here either way. Had I got into the energy sector at the bottom, I would actually be getting out now. Those who accumulated earlier and are now looking at break even, I don't know what to tell them exactly. I certainly wouldn't short this sector, but I don't know if I would be buying this sector now, simply because I think a global slowdown is underway. China is in serious trouble. The refugee crisis is going to put a damper on Europe and European demand. Everything seems to be slowing the way I look at. Truck traffic is down. Truck sales, and I'm not talking about the small ones, but the big 18-wheelers, the Class 8 truck sales down something like 39 or 40%. So there's not a lot of demand there. There's a lot of overcapacity, but who knows? Would I be surprised to see oil go to 50 or 55? No, but at that point, I don't expect it, and if it got there, I certainly would be getting out then, because fundamentally, the global economy is quite weak and getting weaker.
And also, to add to your argument there about the oil market, if the oil price goes to 60 or 65 again on a weak dollar, a lot of these shale oil producers that have cut production, they could bring production back online pretty quickly. I don't know if you've seen on Zero Hedge, but Zero Hedge has had some of these articles that some of these shale producers, they're bankrupt, and they're still producing as much oil as they possibly can. It's just a head scratcher for me.
Well, the reason why they're producing as much oil as they can is just to have. They're producing at a loss, actually, some of them. But they're hoping to hold the loss, to whatever their marginal cost is here. If they do nothing, then they're just literally out of business right now and down to asset sales. I think that's what's going on here, but in a lot of ways, it certainly does seem peculiar. So, we're still in this relative glut. I don't see it easing. I actually believe the U.S. is in recession, and if it's not, it's certainly close to being in recession. So, I don't know. The whole global economy just looks like a complete mess to me.
Yeah, I agree. And you said the U.S. economy is in a recession. I would argue that there wasn't a real recovery after 2008. There was a whole bunch of money pumped into the system from asset prices. There were bubbles created in shale oil. There was all these oil companies given really excessive amounts of credit, and it did create a lot of jobs for a while, but now we've seen the job losses in the states like Texas and Oklahoma and North Dakota. So I don't think there was a real sustainable recovery after the 2008 crash that was creating, a bunch of high-paying full-time jobs.
Well, there was a recovery. It was just an artificial one. It wasn't based on fundamentals. It was based on printing and bailing out Wall Street. Meanwhile, the average Joe is in worse shape. Debt is higher than ever. Banks are more leveraged than ever, especially the European banks. China is a whole other story. Meanwhile, Japan amazingly can't produce inflation to save its life. I did a sarcastic post on that, told them exactly what to do, and I actually proposed negative sales taxes, for Japan, and it was kind of funny. But why not? If we're looking at this other insanity that's going on, we've got negative interest rates that makes it's actually impossible without intervention for time preferences to ever go negative. It's like saying I would rather have 90 cents tomorrow than $1 today. It is an absolutely ludicrous construct, but that is where central bankers have us now. Something like 75% of the world's bonds have negative interest. Mostly it's Europe and Japan.
Yeah, all the major economies are trying to do financial repression, devalue their currencies, like they said in the interview. You brought up Japan. Japan has been trying, the Japanese central bank has been trying to devalue their currency, and yet the yen was strengthening for the last, 5 or 6 months or so. Why do you think the yen was strengthening, and what do you think that signals about the global economy?
The yen was strengthening for the simple reason that Japan didn't carry through with some of its threats. They said we are going to generate, inflation. We're going to do whatever it takes, a Mario Draghi kind of speech. When they didn't follow through on that, when they didn't act on that, the market said, okay, so that explains the yen rally. Meanwhile, the Bank of Japan and Prime Minister Abe is out there, complaining about it, and the market's kind of saying, well, okay, what have you done for me lately? So that's where we are. It'll be interesting to see if Japan really doesn't do anything here. The yen could conceivably strengthen. The yen could also go completely nuts. I mean, we don't know what Abe is going to do. Maybe they try something as stupid as what I said. I don't think they would do negative sales. Who knows what they would do? But that is the kind of idiocy that's prevailing all of these central banks. And we look at this, and we look at the state of affairs in Japan, and they've got themselves in this massive hole, 250% debt to GDP ratio. For what? Trying to prevent deflation. And what harm has deflation caused them? Absolutely none. It is so ludicrous when we look at what they're trying to do, how it didn't work, and the big hole they dug for themselves trying to achieve something with negative value. That is the amazing thing about this whole thing. Japan would be far, far better off if it didn't have all of this debt. And here we are, and they're still ignoring this debt. Japan has cornered almost the entire 50, 60, 70% of the bond market. I forget what it is. And people are still holding on to these bonds, yielding nothing for 40 years. 40-year bonds yielding nothing, close to zero, speculating that the Bank of Japan is going to buy them all up. I also had a solution for that, and this one is perhaps a little bit more realistic. The Bank of Japan, if it wants to hold 100% of the debt itself, maybe it should just put a tax on owning government bonds. People will dump them in a hurry. The Bank of Japan can scoop them all up. Once it has all the debt itself, it can declare the debt null and void. I think that would get inflation cooking, but that was also part of my sarcastic post, and it actually wouldn't surprise me to see something like that happen.
Yeah, and the Japanese central bank is also buying massive amounts of stocks. So they've been trying to devalue their currency, buying massive amounts of stocks. The Japanese people are loyal, so they don't want to sell their Japanese debt because they were asked to buy it and hold it in times of a crisis. It was a national emergency, and the Japanese people tend to be very loyal to the people running their government. The other thing I would bring up, you brought up deflation topic. I see you have Austrian School of Economics books recommended on your website. The Austrian School of Deflation is not a bad thing. If you have savings, you have an increase in purchasing power from deflation. Deflation is beneficial to the person who runs their savings the right way, who doesn't have too much debt, who runs their business and their household the right way. And it's just the economic policy all over the globe, this neo-Keynesian or Keynesian policy, is just ridiculous how they're punishing savers with financial repression. And, people can't get a decent interest rate to live off of.
That's correct. It's only because of all of the debt that can't be paid back to the banks that lent irresponsibly is deflation conceivably a bad thing. Otherwise, deflation is a good thing. And even the Bank of International Settlements, the BIS, has come out and said that. That's essentially the central, the bank of banks. They have done studies that actually showed that deflation doesn't hurt at all. Rather, it's asset bubble deflation that does. And what have central banks done but spawn asset bubble after asset bubble after asset bubble, each with a bigger amplitude than the one in front of it? the bubble that we are in now in junk bonds, in equities across the board has only been exceeded, if that, by the bubble in 2007 in housing, in 2000 by the stock market, the dot-com bubble, and in 1929. And on a median basis, the median PE of stocks is higher now than at any of those times, 2007, 2000, 1929.
Yeah, and if you take out the share buybacks, if you remove those, the PE is even higher than those. So the share buybacks have really kept these PEs artificially low. It's fraudulent what these share buybacks have done to trick investors into staying in stocks.
I don't know if I would call that fraudulent. What I would call fraudulent is the pro forma earnings. The Wall Street Journal has PEs out there, and they talk about the forward earnings. The forward earnings on the PE, not that 17 is actually a reasonably steep PE, but that's what they talk about. They don't talk about the trailing PE, which is 26. Now, these pro forma PEs are looking ahead a year. Okay. Now, if we go back a year in the past, they certainly weren't predicting a PE of 26 for this year, were they? So, they're perpetually over-optimistic on these earnings assessments, and that is the hook that these investors get into on the message that stocks are cheap, or stocks are cheap compared to bonds, which is kind of like saying the cheese is cheap compared to moon rocks.
Yeah, it doesn't make much sense. What you said doesn't make much. Cheese is cheap to moon rocks. So it doesn't make a lot of sense.
So, so here we are. Everyone seems to think that they know what's coming up next. I don't, and they don't know either. And that's where we're at here. We've had a number of people predict crashes this year. I think, I'm not positive, Peter Schiff was one. Certainly Dave Stockman was one. And I had a lot of emails from people, telling Mish, the stock market's going to crash. And I heard that in December, and then in January these people were gloating, and I did a response to that back in December, and I said, well, you don't know this. I mean, how can people pretend to know the unknowable? And I told this person, I said, well, if that's what if you know that that's going to happen, just put every penny you've got in options and bet on the crash. And anyone that did that just lost 100% of their money, because there was a crash, but guess what? The market rallied back to even. And you do that in options, those options just expired worthless. So, if someone did it in options, hopefully they took profits. But I don't know. I'm along the lines, actually, of thinking that there's not going to be a crash. Now, there could be one. But I think more than likely, stocks are so overvalued, they just go nowhere for 7 and 10 years. Now, by nowhere, I don't mean they do nothing for 7 or 10 years, but something like a decline of 8% this year, 4% the year after that, a rally of 5%, a decline of 10%, a rally of 3%, a decline of 8%, and guess what? You add all of that up, and all of a sudden you're down 35, 40%. And, so nothing's going to look or feel like a crash, but the results are going to be the same. Actually, they're going to be worse because, 7 years from now, stocks are going to be down, say, 30%. And meanwhile, for those 7 years, pension plans are going to be assuming 7.5% to annualized gains. Instead, they're going to have annualized losses of 5%. That is going to destroy pension plans. Actually, Illinois pension plans, who are the worst in the nation, some of them are 17 to 31% funded, actually be totally wiped out in such a scenario.
Yeah, and you brought up the high property taxes in Illinois. I've heard you talk about that in other interviews, and you mentioned before we started recording that you're planning on leaving Illinois and moving elsewhere. Where do you see value actually remaining in any of the markets right now? Are you waiting to buy more gold stocks on a pullback? Where do you see value in? Is it in the Japanese stock market on corrections? Where do you see value now in any markets right now?
I think there's value in gold. I don't know if it's going to pull back or not. You know, it's tough to go out recommending someone, buy here. I mean, there were numerous opportunities for people to buy on the way down. If I say, okay, go buy now, miners could correct 20-25% here easily. And, I mean, they certainly corrected far more than what I did. But yet, I do see value in the sector. The safe way to play actually would be, gold's really only up couple $100. It got as high as 1,900. Even there's certainly value in gold. Although, one has to wonder, how much, is there. I don't pretend to know where gold is going. And I don't like these claims of people who say, well, gold is going to 3,000 or 6,000 or 10,000. These claims are all out there. They don't know, and I don't know either. I just have a strong opinion what central banks are going to do when the economy goes into recession, and they're going to print more money. Now, what happened between, and that's what they did between 2012 and December of 2015, and gold sank even though they were doing it. And so why is that? So the reason that happened is because people had faith that central banks had everything under control. Mario Draghi came out. If you look at when gold started its plunge, it's almost exactly timed to when Mario Draghi, ECB president, came out and said, we will do whatever it takes, and believe me, it will be enough. Gold plunged from that point all the way to December of last year, and that's when, people started looking, hey, wait a second here. The Fed says they're going to hike. Well, maybe they're not. That's when the dollar topped. That's when people started looking, does the ECB really have things under control? So the message of gold right now is not one of inflation. It's actually one of, are the central banks in control here, and what's going to happen next? And this is the spot that all along I thought we would get to. It just took longer for us to get to that spot than now. So, all these people saying, well, gold's rising because of inflation, blah, blah, blah. I think gold is rising because of lack of faith, and people are starting to question central banks. And if central banks go out and do another round of QE, where is gold going to go after that? I think up. I thought that wrongly last time, but back then people believed in central banks, and right now people are starting to question them.
Mish, I think I would agree with that. I think a lot of Wall Street money managers expected the interest rates to normalize and start increasing because they were still believing the BS economic data in the U.S. that the U.S. economy was actually recovering, and then they expected the Fed to raise interest rates accordingly, and then that didn't happen, and they started to question what the Fed was saying. So, the Wall Street money managers, these billionaire guys, whether it's Carl Icahn or Stanley Druckenmiller, they are betting on a stock market crash, but they didn't really have much physical gold exposure. They've been starting to move more money into gold and gold stocks the last 6 months, I would say, where they had little or no exposure at all.
Yeah, Druckenmiller in particular. said that his largest currency position, and it's interesting that he calls it a currency because that's how I view things, said gold is his largest currency position.
Now, Misha, I want to ask you also, I think, well, before I ask you my last question, I want to ask you, do you think then the central banks, are they trapped? I mean, obviously they could try a few more things here or there, but I really don't see any scenario where they can normalize interest rates without collapsing everything, asset prices, the real economy even further. Is that the way you see things as well?
I think they're a bunch of fools. I don't think they realize where they are and how little power that they have. I think they're looking back at these last few years of we did it. This was a success, and I would certainly challenge that view. They're still trying to stick to this position that they're going to hike twice this year. Their original assessment was they were going to try hike 4 times this year. So one has to wonder: are they just saying this, or are they dumb as a rock? And in general, I tend to put my faith in the fact that central planners, which is what these guys are, they the idea that they can go out, that they can fine tune this economy, they know where interest rates could be, is as fatally flawed as it was as the Russian central planners could determine the amount of steel that they needed to produce. And if anything, setting interest rates is much harder than setting the price of orange juice. They think they can do this when there's competing global forces, when they're always looking in the rearview mirror for what happened. So I think they just simply don't know what they're doing, and it's starting to show.
I want to ask you your thoughts on the 2016 election then. Do you think, if Hillary Clinton or Donald Trump, if either one of those candidates win, do you think it's going to totally collapse the economy?
I think regardless of who wins, and this is another reason why I actually think there might not, if there is a crash, that it's probably not this year, it might be next year, is a lot of times these severe corrections happen in the first term of a new president, and the reason for that is the president wants to get everything bad out of the way in their first term. Then things can start improving. Everyone feels better by the time the re-election comes. No one wants to have that crash in their third year or fourth year, when they're heading into re-election. So either way, I think the economy is in really dire straits here, and from that standpoint, I don't think it matters. In some standpoints, I think Trump can actually make matters worse than Hillary. If he were to get his trade policies passed, I am a big fan of the free market. I think Trump is hugely wrong when it comes to tariffs. I think a proper policy would be for an administration to abolish all tariffs immediately across the board. You would see investment flow into the United States like mad if we were to do that. Right now U.S. Steel is complaining. Let's just point out steel here, for example. U.S. Steel is complaining about the loss of steel production, that China is subsidizing steel, they're dumping steel, whatever. Okay, if China's dumping steel, who is that benefiting? That's benefiting U.S. car manufacturers who, get steel that they need to build cars at below market rates, if it's really true that China is dumping it. The trade is not between nations. Trade is between individuals. And if we're getting a good price on steel, we should be happy about it. Well, who's not happy about it? It's the few people that are employed in those businesses. Do we really want to raise the price of underwear 300%? So that everyone in the United States has to pay more for underwear to save a few thousand textile jobs? Does that really make a lot of sense? That's what we're talking about here. And in the EU, they're screaming, they're energy nuts over there. They truly believe in this global warming stuff. And even if it's happening, it's more absurd to believe the government can do anything about it. Yet, China, produced all of these solar panels cheaper than they could make them. So what did they do? Clearly they really didn't want what they said they wanted. Was clean energy. All of a sudden, they put massive tariffs on solar panels, which was more important, protecting their own industries rather than their idea, that we need clean energy. People really need to take a step back and think about this, because in effect they're trying to tax the sun. French economist Bastiat, wrote an article way back in the 1800s on this about the candle makers petitioning the government to tax the sun because it's giving out free energy, and it was hurting the candle makers' jobs. And that is exactly what we're doing. That's what Trump's doing. That's what the EU is doing. So that's my biggest beef against Donald Trump is actually his trade policy. So if he were to win, which I think he will, and he puts these practices in place, I don't know. But, Hillary's a warmonger. She's likely to start a war in Libya. She's likely to put a no-fly zone in Syria. If Ted Cruz got in there, he was likely to start a war with Iran or Russia flat out. So I look at this election as the lesser of a bunch of evils. And, I'm in that regard, I'm always going to vote for the candidate who I think is least likely to start a war of those that's electable, and that would be Donald Trump, in my opinion.
Yeah, I'm actually a big fan of Frederick Bastiat. I think he was definitely a genius, a really great philosopher. He wrote The Law. He inspired Henry Hazlitt to write Economics in One Lesson. A lot of Henry Hazlitt's writings were based on, Frederick Bastiat's analysis of economics as well. I'm a student of history, though, so you talked about trade tariffs. I agree with you there, too. We have the Smoot-Hawley Tariff Act, which drastically basically destroyed the U.S. economy. We had the Great Depression of 1929, the stock market crash and stuff. We had Herbert Hoover come in and install Smoot-Hawley. He made things, and Congress at that time, too, they made things, an order of magnitude worse. There's enormous amounts of evidence that these trade tariffs and stuff, basically destroyed the global economy then at that time.
Absolutely.
So, and yet, the politicians don't learn from history. They go back to the same protectionist policies because that's their voters, their special interest groups who are paying them lobbying dollars. That's what they want.
That's exactly correct. Hey, with that, I've got to run. Have your listeners here tune into mishtalk.com, where I write about these things generally almost 365 days a year, literally. Maybe I don't on Christmas. And I write about the global economy about 4 times a day, mishtalk.com.
Okay, great. Well, thanks again for your time, and keep up the good work. You've been doing it, like you said, since 2003. That's really impressive.
Thanks.